Want to tell you guys a story? Farm bankruptcy is the reason that my family doesn't farm anymore. Back in the Great Depression, my great-grandpa, my dad's mom's dad, had a small farm. Well, his farm would be considered small now, but he had 30 cows, which was huge in the 1930s. He did not inherit his land. He had to work his way up from nothing. So he had to go into a lot of debt to get his land and to buy his cows and his barns and his sheds and all his equipment. That was a very smart financial move for the first 20 years of the 1900s. Farm prices were high. It was a booming business. Everybody who could was getting into agriculture and getting into a lot of debt to build their businesses and get a grip on the market as soon as they could. But after 20 years of a lot of people getting into agriculture and getting into a lot of debt to do that, it was a bubble, it busted, and my great-grandpa was there holding the bag. He had a lot of rented land, 30 cows, and no way to pay the bills. That is the classic story of farm bankruptcy that Americans are used to hearing. That's what farm bankruptcy looks like. That's the story we know. It's a plucky, struggling, ambitious, upstart little guy who took on a lot of debt to grow something for himself and others, got his legs cut out from under him by the vicious and uncaring market. That's the story we're used to hearing. That's the farm bankruptcy story we know. And we also need to understand that that story is a century out of date. A lot has happened since the 1930s. And what's going on in agriculture now, farms and their money, is completely different than it was a century ago. Let's dig past the headlines and find out what's really going on. What does it really mean when we hear about a farm bankruptcy crisis? First things first, yes, farm bankruptcy rates are rising from historic lows in the last few years. Once you chart it out, you kind of see what's going on. Also, it's not just farms. Everyone's going bankrupt more right now. For personal bankruptcies, for businesses, this is not just a farm problem. This is the US economy is in trouble problem. This is for everybody. And it's wild to me how everybody knows that farm bankruptcies are going up, but we're not talking about how everybody's bankruptcies are going up. There's not a farm bankruptcy problem right now. There's just a bankruptcy problem. And farms are part of the US, so they're experiencing it too. We're all going bankrupt more, and we don't even know that. That's weird. What's going on here? Well, a big part of what's going on is the farm lobby exists, and their job is to keep pushing stories about how the farm sector is in crisis so that people panic and Congress sends farmers more money. That's what's going on. You see the same thing happening with the farmer suicide crisis. As someone who has lost family members and friends to suicide, I think it's really rough. This is being made into a story. The farmer suicide rate is exactly the norm for their demographic. Older, rural white men with guns. It is exactly on par. We have occupational data for suicide rates, and if you line them up, you get a long list of rural and blue-collar jobs, and farmers are not even in the top 20. The farm sector really just wants the US government to send them your money, and to do that, they have to keep everybody scared that they're about to collapse. There's just a lot of people who have that as their job. That's why there's always scary headlines. So today I just want to talk to you about farm bankruptcy and all the background farm and money stuff that the news is never going to tell you. It's not because journalists are bad people, it's because most folks just don't understand agriculture. That includes folks in the news, so they're just going off of whatever talking points the farm lobby sends them. When the only information that's out there about agriculture comes from the farm lobby that wants your money, you're just going to get a cycle of scarier and scarier headlines that don't tell you what's actually happening. So here's a few key things we'll talk about today. First, underneath all the scary headlines, farmers are not more likely to go bankrupt than other people. That could change. With this whole soybean thing, that could always change, but let's make sure we understand the baseline of what's actually happening right now. The soybean crisis has not even really hit farms yet. Second, bankruptcy for farms does not mean what it means for you. There's a special kind of bankruptcy for farms that's a lot softer, a lot cushier, and most of the time allows farmers to keep right on farming. It doesn't mean the farm is over. It gives the farm time to collect, reset, and keep on going. Bankruptcy is not how farms go out of business. It's how they stay in business. And that's an important thing to know whenever we're hearing panicked news about farm bankruptcy. Last but not least, surges in farm bankruptcy don't mean agriculture is over. Some of the biggest times of growth and real expansion in US agriculture happen right after a big wave of bankruptcies. Now, how does that work? We'll talk about it. To make sense of farm bankruptcy news, there's a few things you have to know about agriculture. Family farms are not who you probably think they are. I feel like this is something I go over in every video, but most small family farms in the United States are millionaires with a six-figure income. I know that's really different from what we've always heard. We all grew up hearing about how small family farms are struggling and getting pushed out of the business. And that was true for a very long time. And after a century of pushing the smallest and poorest people out of the business, who's left in agriculture? It's not poor people. That's why, nowadays, most small family farmers in the United States are millionaires with a six-figure income. So if you hear farm bankruptcy and you think Great Depression, People like my great-grandpa being forced out of the business, that is not what's happening anymore. And we deserve news that's going to be straight with us about that. But I think most people who do the news just don't know that. They don't understand that. They've been raised on the same diet of family farmers or small, poor, and struggling as all of us. And so you wind up with kind of a circular logic where everybody in the country just knows family farmers are small, poor, and struggling, and no one bothers to fact check on that. The reality is just that farm country today is not the same farm country that our grandparents remember. I think a lot of folks were just building it on what our grandparents told us about, children's storybooks, farm lobby ad spots. And so you wind up with a version of agriculture that has no resemblance to what's actually going on in farm country. One of the most interesting things that'll happen is when I talk to urban audiences about how farmers are actually pretty wealthy. Urban audiences get shocked because they know about agriculture secondhand, and that doesn't sound like anything we've been told about agriculture. But when I talk to rural audiences about that, about how farms have a lot more wealth than most people think, their response is more like, I know that's right. The only people who are surprised to find out farmers are wealthy is folks living in urban areas. The bottom line, they are not the peasants from the Great Depression that you might be thinking about. They tend to be families with much better financial footing than most Americans. And so if we're worried about bankruptcy protection, we should probably just be worried about most Americans, not farmers as a special class. But speaking of farmers as a special class, that takes us to number 2. And that is how bankruptcy works different for farms than it does for everybody else. Farms get something called Chapter 12 bankruptcy. You've probably heard of Chapter 7, Chapter 11. Those are for individuals and businesses. Chapter 12 is a special kind of bankruptcy that is just for family farms and family fishermen. Chapter 12 is designed to give people a way to keep their farm or fishing business going without having to sell off their land, their boats, and their other equipment. So most of us, when we hear bankruptcy, we think losing everything. We think being forced to sell off everything you own to pay off debtors. That is not how it works for farmers and fishermen, because they have a special kind of bankruptcy that lets them not have to do that. Chapter 12 is more like hitting pause on all your debts and giving you some time to put together a repayment plan that's going to work better for you. You can sell some of your land to pay off debts under Chapter 12, but you don't have to. And if you sell land under Chapter 12, you don't have to pay capital gains taxes on it, which means you don't have to sell nearly as much of your land as you would if you had to pay taxes on it. It's a tax exemption. I'm not an accountant, but I don't think the other kinds of bankruptcy let you sell off lots and lots of assets tax-free to get out of bankruptcy. So the way Chapter 12 bankruptcy works, it's not the farm going out of business. It's a way for the farm to stay in business. It is a special kind of bankruptcy that is specially designed to make sure people don't go out of business. When you hear farms going bankrupt, most people hear you have to sell off the land. That's literally not how it works. They have a special form of bankruptcy designed to keep that from happening. That's also a special level of protection that nobody else gets besides farmers and fishermen. Now, to be able to file Chapter 12 bankruptcy and get those special protections, you have to do a couple things. You have to get half of your income and have half your debts from farming, right? If you're a dentist who happens to have a couple acres that you raise chickens on, you're not going to be able to file Chapter 12. You're not going to qualify. And I actually think that's fine. If you're going to have a special kind of bankruptcy for farmers to keep them from going out of business, it should be for people who are farming professionally. I think that's fine. But here's where it gets interesting. Chapter 12 was originally designed for small and medium-sized family farmers. All those debts you could discharge under Chapter 12 were capped at around $3 million. It grew over time, but by 2019 it was capped around $3 million. And originally, you had to be getting 80% of your income from farming, not 50%. Because what you don't want is a bunch of wealthy people just buying up farmland so they can qualify as farmers and get special bankruptcy protections. You don't want that to happen. You want to make sure this is reserved for people making their living in agriculture. So there were some restrictions on who could do it. In 2019, Donald Trump expanded those restrictions to allow a lot more rich people who just own a lot of farmland to qualify for Chapter 12 bankruptcy. And this was expected to dramatically increase the number of Chapter 12 bankruptcies. And that's exactly what happened. Chapter 12 went from being a special protection for people whose livelihoods depend on agriculture to more of a coverall for all kinds of people with a lot of wealth and happen to own some farmland. And now they can access those special protections that were meant for family farmers. And that helps explain why farm bankruptcies are on the rise. There's a lot more wealthy people now who qualify to file bankruptcy as a farmer. And as our economy is encountering problems, a lot of the people with a lot of business holdings are choosing to file under Chapter 12 just because they qualify for that now. The other change Trump made back in 2019 was instead of capping Chapter 12 bankruptcy at $3 million, it is now $11 million. That has opened the door for a lot of quite wealthy families to use Chapter 12 bankruptcy to discharge their debts when they wouldn't have qualified before. And I know the phrase $11 million worth of debt sounds shocking, But let's remember how banks work, right? They don't give out $11 million worth of loans to poor people. You have to have a lot of assets and a lot of financial capital of your own to qualify for $11 million worth of debt. So what these changes to Chapter 12 bankruptcy did was take this program that was designed to protect small and medium family farmers whose livelihoods depend on agriculture and expanded it out to a lot of people who may just be agricultural investors. Now, half of their income still has to come from agriculture, but by the time we're talking $11 million worth of capitalization, you don't even have to work on the farm anymore to be making a lot of your income from owning the farm. That's what Trump's changes to Chapter 12 did, and it might help explain a lot of the rises we're seeing in farm bankruptcy. As our economy starts to hit serious problems from labor shortage, from deportations, from trade wars, and from high interest rates, you can expect to see a lot of businesses get in trouble, and you can expect a lot of wealthy people who own businesses start to get in trouble. And now that we've expanded who qualifies for Chapter 12, that starts to look like a lot of farm bankruptcies on the rise. So what we're looking at right now is not a farm crisis. It's just a general economic crisis. I think we can certainly expect that trade wars will continue to make things worse for farms, but the impact of China not buying our soybean harvest from this fall has not even started to hit yet. We cannot blame the rise in farm bankruptcies from earlier this year on the trade war yet. That's just coming from how our economy is not doing well, period. Keep in mind for making sense of farm news. Farm media literacy, if you will. The way agriculture works, there's always going to be some part of the country or some section of agriculture that's in crisis. Let me give you an example. Let's say we had a year when corn yields were really good. That means everybody had a great harvest, the weather was good, and so everybody's got a bumper crop. Well, now you've got a huge supply of corn on the market, so the price for corn is going to collapse. If something goes well and you have a good crop, that means the price is going to tumble. On the flip side, if you had a bad year, if there was a drought, if there were floods, if there was something that made a bad harvest that year, supply goes down and the price goes up. So every year you either have a good harvest or you have good prices. You can't have both. It is very, very unusual to have both a good crop and good prices. Those just don't happen at the same time. So agriculture can supply kind of an endless supply of bad news, right? Either the weather was bad or the prices are bad. There's always something bad going on. And there's also layers on top of that. If grain prices are bad, then grain farmers are sad because they're not making much money. But livestock farmers like that because they buy grain to feed to their animals. And so when grain prices are low, livestock farmers are having a good time. So no matter what happens, agriculture always has some good news and some bad news somewhere. So if you are the farm lobby and your mission is to persuade Americans that farmers are in crisis all the time, you're always going to have headlines to pull from somewhere. That's what's going on. Last thing we need to talk about. Farms going out of business is not the end of the world. In fact, it can actually be really helpful to keeping the food system going. I know that sounds like heresy, so I should explain myself. I spent several years working with family farms all over the US, all over the size range from very, very small to quite large. Something interesting that I noticed was you almost never run across a family farm that is making commercial quantities of food and selling it out on the market. You almost never run into a farm like that started after the 1980s. And I thought that's interesting because building a new farm into a business that can support a family takes time. But it doesn't take 40 or 50 years, maybe 10 or 20. Why would there be so few of them starting after the 1980s? It's worth looking into. And something I have to ask myself is if it has something to do with the farm crisis. That's the last time we had a lot of farms go out of business at once, and that means it was the last time we had a lot of farmland come up for sale all at once. If I had to guess, I'd say that might have something to do with it. And you can also see that when you look back at our farm history. A big spike in farm bankruptcies during the Great Depression. My great-grandpa was one of those people. So you'd expect to see a collapse in the number of farms during the Great Depression to go along with that. All those bankruptcies, all those people going out of business, there must be fewer farms. But what you actually see is the opposite. You see a lot of new people getting into farming during the Great Depression because there was land available. The farm story that we're used to hearing from the Great Depression is Dust Bowl, people going out of business. We don't talk about how many new people got in, how many people were able to escape unemployment by getting into agriculture. We don't talk about that. Farms going out of business is not the end of the world. It's actually a really important way of getting new people into agriculture. And when you look at the pattern of how farm bankruptcies happen, it usually comes after a bubble. It usually comes after there's a price surge for a decade or two in some big crop or commodity, and farms start investing more and more money in growing that one thing. In the 19aughts and teens, grain and livestock really took off for global food supply reasons that we don't have time to get into right now. But farming grain and livestock in the US for that 20 years became incredibly profitable. So people started buying more and more farmland. The price of farmland started going up and up. People started buying more and more equipment to grow more on the land that they owned. There was a bubble. The problem was a lot of those High grain and livestock prices came from exports. Things like World War I, Europe couldn't grow enough of its own food. So once Europe got back on its feet, the price for grain and livestock collapsed. Over the 20 years between 1900 and 1920, Americans had gotten into more and more debt to buy farmland, to buy equipment, to buy livestock, assuming that the rising prices for grain and livestock would never end. Well, that's not possible. An eternal price increase is not possible. So there are all these people left holding the bag. Again, my great-grandpa was one of them. So what you're left with is farm country where all these people are holding all this debt for investments that won't pay out anymore. You have all these people who are underwater on all these debts. And there's two things you can do with it. They can keep limping on forever trying to pay off debts that aren't worth anything anymore. The Jim Crow South actually did this with cotton. They just kept growing cotton for decades after the Civil War when there was no market for it anymore. And that is why the South is still poorer than the rest of the United States to this day. Because people were tooled up for cotton and they insisted on continuing to grow cotton even when it didn't make economic sense anymore. So that is one way to handle the bursting of a farm bubble. You can just keep doing what you're always doing, never change anything, and be stuck in economic doldrums for as long as you like. That's one option. Or you can have a way for people to get rid of their debts and start over. And that's what Chapter 12 farm bankruptcy is. It's there so bubbles can burst and people can either reorganize and keep on farming something different, or even after filing Chapter 12 bankruptcy, sometimes farms still have to go out of business. And that way they get to leave with more of their dignity intact and free up the land for someone else to try. Bit of an aside, if you look at this, there's something really interesting here. We've all heard about the 1980s farm crisis and how it forced a lot of people out of business. But if you look at this, you can't even see it. You do not see a real decrease in the number of farms with the 1980s farm crisis. It stays pretty stable. So the farm crisis is really notorious, famous for how it disrupted a lot of rural communities, wreaked havoc on a lot of people's livelihoods, but you don't really see a lot of impact in the nation's food supply. You don't see that. So I just want to point out that agriculture is more robust than people might think. You can have such big shakeups in the farm sector, like the 80s farm crisis, and still not lose enough farms to make a blip on the graph. Never mind a noticeable difference at the grocery store. There were very real cost of living issues in the 70s and 80s that came from inflation and the oil crisis. They did not come from the loss of farms. I feel like some of the farm lobby messaging is, you have to save farms or else everybody's going to starve. So I just want to point out, we have had pretty serious farm crises that did not lead to food supply problems. That's especially true right now. The farms that are under the most financial threat from the trade war are farms that really focused on growing things for export. Soybeans are the crop that's most in the news for that right now, but there are other crops that also mostly got exported, like tobacco. The farms that are going to have the most financial stress because of the trade war are the ones that were not growing products for Americans in the first place. So I just think it's important for us to know the difference between farmers are having an economic crisis and we're looking at our food supply problem here in the US. Just like the 70s and 80s, we are having very real cost of living issues right now. We're having some very real grocery cost issues right now, and they're coming from completely different sources than farms. These grocery price increases we're seeing are coming from things like grocery stores consolidating and not having to compete for your dollars. They're coming from things like general inflation, lack of farm workers to pick the crops, not from lack of farms. So when you see news and articles and lobbyists talking about how food prices are going up because farmers are under financial distress, hold on a second. Take that with a grain of salt. There's a lot more going on in the food system, and we have had serious farm crises before that did not turn into serious grocery inflation. So to wrap this all up, I just want to make sure that people have the farm literacy and the financial literacy to understand what's actually going on. Right now, mid-October 2025, most farmers in the US are still way better off than most Americans, a lot of whom can't afford a $400 emergency. I want agriculture to thrive, but we got to do that by being good at what we do. Taking shortcuts like wrecking our own markets and then demanding that other Americans make it up to us, especially when most Americans are way worse off than farmers are, is nonsense, and we should not be doing it. In agriculture, we talk a really good game about responsibility, wisdom, and long-term planning, and those are good principles I stand by. If you like this video, felt like you learned something, go ahead and give it a like, subscribe, comment. It really does help more people see this. And if you really liked it, there's a Patreon, so check it out down below.